Welcome everyone to a new ATFX report. My name is Gonzalo Cañete and this is Market Snacks. It's a quick update of the last 24 hours of data, news, absolutely everything that happens during the last 24 hours and is affecting the market and the prices. However, I would like to start with just reviewing the quotes of the market at the moment. This is Tuesday, 10:30 London time. And we can see, starting with the US market, we can see that the futures, Dow Jones is dropping by 0.12%, SP 500 is dropping by 0.24%, Nasdaq is dropping by 0.44%. However, European market is actually rising. European market, which is open right now, is rising not so much, but it's starting to take certain levels. DAX 40 is rising by 0.24%. CAC 40 is rising by 0.31%. Euro Stocks is rising by 0.32%. Why the market is rising in Europe? What's the reason behind of this? If you want to keep a quick and fresh update on this, you can either check these videos or you can also go every morning to our Twitter X account and you can just check here the post I'm doing every single morning, which is don't miss our daily market update on our blog. If you go to our blog, you will find now that I'm making a summary of the top news published on Reuters, Bloomberg, ING blog, absolutely all of them. So I'm processing all this info and making in a whole package, summarizing all bullet points for you every single morning. Let's go to the main points. First of all, I was just highlighting the news from US. Why? Because we have seen that US factory orders are getting actually weaker, dropping, fell by 3.6%, which is in line what we were expecting. Right now, the Federal Reserve is so happy because US economy seems to be slowing down little by little, and it means that if the US economy is slowing down, is what they have been expecting for a very long time, is the only signal they trust that they can believe that inflation is actually gone. Otherwise, if the economy of US is still strong and the numbers are going well, the Federal Reserve, basically the policymakers from monetary policies, still gonna suspect that maybe for any reason inflation could come back. Which is take me to the next point, which is the underlying US inflation pressures is in October. New York Federal Reserve said in one report that they believe that inflation pressures are dropping, are gone, are getting away from the main risk that we were facing for the whole year. And actually, it's in line with the comments done by the president of the Federal Reserve of New York last Thursday when he John Williams say, based on what I know now, my assessment is that we are not or near the peak level of the target range of the federal funds rate, which means there is no need to keep increasing interest rates by the Federal Reserve. And if that's the case, the market, Wall Street in particular, are going to be so happy. And I think this is mainly the main message that the market has been translating or just showing to us or proving for the last 4 weeks. We have been seeing for the last 4 weeks a market rising constantly. However, for the last 2-3 sessions, SP 500 couldn't break up the level of 4,600 points, which is a level I was mentioning in the previous report that could be the top resistance when the market will probably take a pause, because for the last 4 weeks there was no serious correction on that uptrend, which means do not trust any trend if there is no natural corrections on the cycle, because in absence of these natural corrections, the final correction that the market could make is going to be more aggressive. Keep going on Europe size. We can see also that ECB Hawk Channel, one of the most tough members of the European Central Bank, is finally admitting that maybe we are actually doing well in terms of inflation. So again, in the same line with the Federal Reserve, she's literally saying, Isabel Schnabel, a European Central Banker board member, recognized additional interest rate hike in response to a significant drop in Eurozone inflation, has recognized additional interest rate hike in response of drop of Eurozone inflation, who had insisted just a month ago that the rate hikes must remain an option because the last mile of the inflation fight may be the toughest. She said she had shifted stance after the unexpectedly, here we go, pay attention, benign inflation readings in a row. We have seen in a row few inflation results in Europe dropping, and for the first time, one of the top members of the European Central Bank is switching her opinion, is changing her mind, and start to consider that maybe there is no need to keep increasing interest rates or even consider that as an option. She said, the recent inflation print has given me more confidence that we will be able to come back to 2% no later than 2025. So still, she's not confident enough to announce that inflation will drop to 2% before 2025. And actually, the current inflation rate in Europe is 2.7, 2.4, which is incredible because they were expecting like keep over 3% even the next year, and it's still dropping. So honestly speaking, follow this tendency. Probably in a few months they could actually face a 2% if the things are keep going in the same direction. In the UK side, we got also inflation expectation rise in October. This is published by Citibank and YouGov, one of the they say public expectations for inflation over the medium to long term, which are closely watched by the Bank of England, rose to a 5-month high in October, according to the survey published late on Monday. And again, survey done by Citi and YouGov. So you got here a few contrary positions in terms of inflation rate, because the Bank of England is actually considering this as a kind of negative data in terms of if their data are continue or the expectation of inflation actually are right and inflation rise again, Bank of England gonna keep pushing interest rate up, and therefore the pound's gonna go up, the market's gonna drop again, and the economy gonna slow down in UK, which is a worry thing, because UK retail sales see weak sales growth in November despite Black Friday deals. So the retail sales growth in the United Kingdom has been weak in November, regardless the Black Friday deals, and therefore, if the Bank of England consider the inflation expectations can come higher or even worse than now, an increase in interest rates gonna attack directly or destroy part of this demand or consumption, and it's gonna affect the economy. If it's affecting already, imagine in that case. Now, I also mentioned the inflation in Japan capital slow, which is good because Bank of Japan was considering also to change his monetary policies and make more aggressive monetary policies, more tough, actually contractive contention in monetary policies, which means like eventually the yen could switch 180 degrees against the dollar, because for the last few months dollar has been going up against the yen, and they cannot go in forever in that direction. And the problem that the Bank of Japan has on the table, it was the inflation in Japan was rising, 3.3% was the last reading. And again, if the inflation is rising in Japan, they only got one chance, which is apply a monetary policies that reduce the liquidity on yen, and by that try to contain the inflation, especially in Japan, because it's a country that is importing absolutely everything. It's a net importer, and therefore every single drop on their currency make all the goods and articles from outside on the basically trade balance turn negative, and push the price up, and then they suffer more inflation based on that. Well, that was a summary. I hope I give you all details, so explain in the proper way. Now, checking the market and the evolution of the prices, we can see that, again, starting by US market, the price is making a kind of pause there. As I told you at the beginning of the video, 4,600 points are not breaking up, and therefore the market is making a lateral there. If we go to Nasdaq, we can see something really similar, a resistance in around 16,000 points, and from there dropping to 15,754 right now, 52, and still dropping. So it means like it's a natural correction after all of these weeks rising the market. In the case of Europe, you can see DAX taking so far what it looks like a pause, again in the 16,425 points, which is more or less the maximums registered during this year, as you can see here. So probably that correction is coming this week. US market and European market gonna start to take back certain points to make a pause and to take probably more orders. Let's check dollar because it's very interesting. Dollar has been recovering for the last week. Probably just because the European Central Bank is also stepping forward in terms of do not rise interest rates, take a more soft position like the Federal Reserve were doing, and therefore if euro is dropping, if euro is actually getting softer, it means like dollar more attractive for any investors to hold the money on those dollars. Also, you got the bond, US bond rising again, which means like it's more attractive again for foreign investors if the bond is coming back to the main level, so around 5% of returns for every single bond. More people gonna go, more funds, more hands gonna switch from whatever is the currency to dollar, and then the dollar gonna start to get stronger. If the dollar is getting stronger, the natural reaction of euro dollar is drop, and is what we have been seeing for the last few days. Euro dollar dropping, the worst from Central Bank of Europe. The softer position from Central Bank of Europe is making also the euro softer, and therefore euro dollar is dropping because they cannot hold that uptrend against the dollar. And twisting on commodity, we also got the oil dropping, still dropping, because as a reminder, last week I already made a video talking about this topic, but last week we got OPEC plus, the countries who produce oil, trying to decide if they're gonna reduce or cut the production for the next year. It was certain discussions about the topic, especially from the sides of Africa, Nigeria and Angola didn't want to go with the same goals, didn't want to cut the amount of oil that Saudi Arabia was requesting to all members. And at the end, they announced that they would agree to cut the oil production, but it was 900,000 barrels per day instead of the 2 million barrels per day request by Saudi Arabia. And therefore, the agreement is much less than expected, and the price of oil was actually really weak because the market reaction was like, well, is less than 50% of the expectations, right? Going to gold, it was super strong on Monday opening. Australia market, New Zealand, they were open and the gold was rising about $2,140 per ounce. But immediately after, the next hours was just dropping, and now it's close to $2,044 per ounce. Is this actually kind of pullback to take more long positions mainly from hedge funds that trade on commodity, or is actually just an extension, dilatation on the price, and the price of gold gonna start to go calm and start to quote inside of the range? Well, depends. Right now, what the chart is telling to you is 1, 2, and 3 times touch those levels and come back to the main bottom of the range. In this case, they went so far. So I will say if we can see the gold closing this week in around $2,000 per ounce, probably it was just a dilatation. Otherwise, long positions could entry on those levels and start to push again a second shot on gold and try to move forward the gold to rise levels. The only factors that could help to this is like either a weak dollar, which is not what we're expecting right now, because we have seen for the last 4 weeks dollar getting weaker, and therefore the dollar should recover more or less for the coming days, or instability in terms of worldwide security. I mean, in terms of any kind of world conflict that could push different nations to the conflict, which is Israel, Hamas, Iran, and so on. If anything happens in that scenario, probably the gold gonna start to rise again. And the last one, it was very interesting, the move done by Bitcoin, which is super strong, keep rising above $40,000, and amazing. It's breaking up actually the uptrend they was doing, this runs was breaking out, and probably now we can expect a pullback in these areas and still quote about the $40,000, $39,000, $38,000, and push again, keep pushing up and up to the next level, which could be $45,000, $47,000, and so on. Okay, I think that's all. That's a good summary. I hope you like it. If you want, I include you also in the newsletter of news I'm doing every morning fresh. You can just contact me through the email, or simply just subscribe or follow the account on Twitter X, which is ATFX slide down connect. Right, you're gonna get all the updates during the session. I publish here the charts, comments, and so on. Okay, well, see you in the next report. Take care. Bye bye. Thank you for watching. And if you like the content, please thumb up. Thank you.